All right, we're live on YouTube. Live on TikTok. And then, put on my live on YouTube chat. And then we're good to go. So I'm going to trade back with real money on Monday. Monday I'm going back to trading with real money in my funded account. I'm really excited about it. I think I got my emotions in check this week, paper trading. There's nothing wrong with it. But I wanted to put this on here because for people who ask, how much money have you made trading? How much money have you made trading? I've made a total, well, I'm in the negative now as of buying funded accounts. I flipped my account from $100 to $400 or $500. And then I started doing funded accounts. And then when I started doing funded accounts, my emotions just went in the shitter, and it took me like another 6 months to get funded. So now my journey starts. I am funded. I have a live account. And this is actually where my journey starts. So today I learned, let's talk about the paper trades I took today. We can go full screen. The paper trades I took today. Great day. So today, so basically this week I was rotating on if I can just look at the 15-minute and the 3-minute chart. If I can just look at the 1 hour and the 3-minute chart, the 4 hour and the 3-minute chart. And technically I learned this week I cannot. So yesterday's trade, the 1 hour PD array was the one we bounced off of and ran up. I did not catch that because I was looking at the 4 hour. Today, the 4 hour trumped, even though I was only looking at the 1 hour. We obviously have this 1 hour gap here. 10 o'clock, we had a nice move down. Like I said, if it's a nice move down, I'll take it. So, got in. It was a 3-minute fair value gap somewhere up here. Sold here, but if you look at the 4 hour, we ran down to the London lows, which lined up perfectly. That's why you don't really need the higher time frame analysis, but you do. It lined up perfectly with a 4 hour fair value gap. So me just taking this to London low, I got back in. I'm not mad at this. Obviously, if I was on the 4 hour, I would have held this trade. But this is a time frame we could reverse off of, like we literally did yesterday. So I took my profit, and then obviously we inversed it with a lovely inverse on the 1 hour. As you see, the candle closed right below, and then we came down. Obviously now it's blue because it came down out of the 4 hour gap and ran straight back up. That's why it's a blue candle. The 4 hour candle is blue, but originally the 4 hour candle was a beautiful sell. I mean, actually it still was a white candle, but it wound up looking like a big white candle, and it came up. But as you see on the 4 hour, that's the gap we reversed from. It happened to be a London low, went with it perfectly. Hammer candle before, you could have gotten in right at 10 o'clock. You honestly could have took this trade, I swear to you, off the 4 hour chart. Got in right at 10 o'clock, stop loss above the middle, the equilibrium of London, and then take it down for almost a 1 to 4 off just the 4 hour chart alone. Crazy. So I learned you have to trade them all. Obviously, I don't like that because my screen is small. As y'all see, I'm on a laptop. I'm in Mexico. I don't have a setup. I don't plan on, I plan on living here like for a little bit, but I do plan on like moving around, traveling. I'm in a digital nomad phase, so I might get the 3 screen extender, but I'm gonna wait to a payout to get that. However, this is my life now. 3 screens, the 4 hour, the 1 hour, and the 15-minute, because what we're gonna backtest today is this, because I just did a session before I got on the charts with y'all, and as you see, I can look at 1 or 2 time frames only, and I don't have to trade every day. On the higher time frames, you will get a setup almost every day. You will get a setup every day, but it might just be like at 1 or 2, which you might not want to stay on the charts that long. But as you see here, the 1 hour, there's no gap here. This is the 15-minute gap over here. And then, sorry, now none of these all fit. Oops. On the 4 hour, as you see, there's no gap either. This was the low we were targeting on the 4 hour. So where did this reverse from? I don't know. You wouldn't know on the 4 hour or the hour, but today, the 15-minute was the winner chicken dinner, and then it bounced off a 15-minute fair value gap and then ran up. You see what I'm saying? So you do actually have to watch all 3. So that's what we're going to backtest tonight. I'm trying to see if I can fit all 3 in the screen for y'all. And we're just going to see how it moves at 10 o'clock. And then you'll see like which one, like it might one day bounce off a 1 hour gap. It might bounce to a 4 hour gap. Over here, it could bounce off a 15-minute gap like it did here. Matt asked how to remove the fear from press the button, even if you know the price is going. That is a journey between you and yourself. But for me, it comes and goes. I'm at a point now where I'm a little scared as well. Now that I'm back on a live account. But for me, I just started with a small account, like a $100 account, a $50 account. And then every time you see your setup, hit buy. Every time you just hit set, like you just have to hit it and not care if you win or lose. Just get used to losing, like expect to lose at that point. That's what helped me not get scared about pressing the button. And then after I've traded it for a little bit, like now I've been scared, I just paper trade. And then after a while, you're gonna get mad at missing moves. Like this, like I paper traded this. I did not check this on my live account. Like today, you know, that's that. So I want to delete this, but I'm like, I already recorded a video, I think. So it's just one of those things where you're either gonna get tired of missing out, or you're just gonna have to train yourself to lose and just use something that's why I always suggest options. So you can put $50 in an options account. We all spend $50 on a meal. We spend $50 on a pair of shoes. Like, you gotta look at it like that. I mean, technically this is a 4-hour order block. Now that I'm looking at it, I don't really trade order blocks, but I'm learning order blocks because on the higher time frame, there's not always gonna be a fair value gap. If there's not a fair value gap, it's usually an order block. I've learned that as well. If there's not a fair value gap, which there was one on 15-minute, but it'll be an order block. But yeah, that's something you just have to learn on your own. It's just, cause everyone's emotional tolerance is different. Okay, so if you don't know what an order block is, it's on a move up, it's like the red candles before the move up. If it's a move down, it's the green candles before the move down. Like this would be the order block to this move down. This green part here. And it's the bodies, not the wicks apparently. Some people do the wicks. Like this is an order block for the down move. And this is why I don't trade order blocks or like supply and demand, because look, we ran straight through that motherfucker. This day we did come through it, but you need a little overall bias anyway. But that's it. Or technically this could be a breaker block more so than an order block. Now I'm looking at it. I don't really trade those, but I also have learned on the higher time frame. Like I said, the 4-hour we did not get a fair value gap, so you need some kind of point of entry, and it's usually a breaker or an order block. Or like I said, the 15-minute will have a gap. I like fair value gaps. I don't really like order blocks. I've been intra trading for 6 months. I got my model, but issue is fear. Yeah, you gotta just take the trade or start with a small account. Like I said, I always suggest options because the futures, it's not going to be that small. Or ES. Honestly, too, if I lose on Monday, I will have to probably go back to ES. ES price action is just not, NQ's price action is better and the moves are bigger, but since the moves are bigger, when I lose, my losses are bigger. All right, this is our 4-hour, our 15, and our 1. Previous day low is right here. It looks like this is where we're going. We do have a 4-hour gap here, a bullish one, and then we do have a gap up here, but this candle has to make it. Let's just see how the markets react. And that's it. Sometimes you just gotta watch. Sometimes you need to mark up a trade all the time. All right. I didn't mark out 10 o'clock either. All right, it's the 10 candle. Okay, looks like it's just pushing down right through the gap. And then reverse back up. How far up are we gonna go? Boom. It's pretty good. That's a pretty good move up, honestly. All right, the 15-minute. You know, I mean, this is a good move up. Then you would enter on the 3-minute. We don't have a really entry on the 15-minute. Nice wick back up. 1 hour. If you wanted that move at the 1 hour, that's a nice move down if you wanted it to fill the whole gap. But I would have waited for the reversal and then just take it to the high of the morning or the high. Let me make this bigger for y'all actually, because once you get your reversal back up, do you like ICT one set up for live strategy? I feel like there's a few of those. Like there's the lunch macro one set up for life. There's the ICT silver bullet, but I do like, yes, the ICT silver bullet. Yes, that's one of the reasons I trade at 10 o'clock. You're not gonna always get that reversal, but this is it. This is literally it. 10 a.m. reversal, back to the upside. All right, so the 3-minute chart. We got a lovely inverted gap here. And then once we close out of it, up here, stop loss at the low, take it to those highs. So that's why I learned that too. You don't even need to go like, y'all see me mark liquidity on the 4 hour, the 1 hour, whatever the fuck. Yes, you have them, but you don't need to take it all the way up to the London highs. As you see, you get a nice 1 to 3 right there. You know what I'm saying? You could even took it just to this high here. Obviously, it kept going. Check out this high for a 1 to 4. That's all you need. Like, you just wait for a reaction off of these gaps. Sometimes these will fake you out. Like, this candle would have scared me a little bit, but I kind of knew. Or I would have waited for the inverse. This is a nice inverse of this right gap. It's literally almost the same one we got today. But luckily, where are we? Yeah, the one we got here, inversing this gap, and it continued to run down, but then it did reverse. But you could still play. We obviously played this. And again, this is very much sped up. This is a whole hour time frame. So this would have been a nice trade. Let's see what it looks like on the 3-minute. It's still not a bad trade. Yeah, there's a gap here. That's not that bad of a trade if you wanted it. If you wanted this, like I said, this is playing out in real time. Like, these are all 3-minute candles. Like, you're gonna have time to get into this. I know when we replay, it looks crazy. I would have took it down just to the bottom of the gap. 1 to 2, that's not bad. Is there a liquidity point in here? There was one right before, and the next one's down here. We obviously did not go all the way down there, but you filled the gap if you wanted it. But obviously, the bigger trade was the reverse back up at noon. I usually would take this one though. I'm not gonna lie to y'all. I like to get in the chart and out of the chart. Can you show us the market structure? The MMS and bearish move today. The AM wasn't clean. I didn't take a trade. Today the morning was very clean. This is very clean price action. Very clean. Swept London highs, ran down into a 4-hour for value gap, reversed, took out the New York highs. A very beautiful price action today. What do you mean by MMS? Do you mean MSS, like a market structure shift? Today was beautiful price action. Even if you took it here to this 1-hour gap. And then once we inverse, I got in again. A market, well, it depends on, I like my market structure shifts off of inverted for value gaps now because your entry's a little better, but you can take them off of a regular, prime example. Your market structure shift, oh no, we got a swing high right here. The swing high, this is a market structure shift. Once the candle closes above this high, that is your market structure shift. Prime example why I don't wait for it to come back into fair value gaps, because as you see by this, we never came back into any of the gaps down here. We almost did, and we kept going higher. So if I'm gonna try market structure shift, I get in right after the candle closes above. I don't wait for the pullback. Yes, it could pull back, it did not. Now we got a fair value gap tab here off the inverse. It came an inverse and then came back in a tap. For the downside, our swing low was here. So once we candle closed below that, market structure shift. So I would have entered off of this, but our inverse fair value gap gave us a better entry. Market structure shift entry is down here. Fair value gap, inverse value gap is here. Did not tap you back into this fair value gap here. That's why I get in on market trigger shift. I know this guy in one of my lives was like, you disrespect OTE. Yeah, because OTE has not been hitting unless you're in the 1 minute. Sometimes it will run without you, and you're right. And I don't care to get some days some days the market trigger shift doesn't happen till way down here. It does wind up pulling back into a gap, but then it still goes my way, so it doesn't even matter. You just have to prepare for that drawdown of it retracing. Doug, I'm trying to help you get mentored by a guy working 3 firms on Wall Street. I'm okay, but thank you. Thank you, but no thank you. Wall Street men, I don't really like how Wall Street men trade, no offense. But yeah, I mean, if anyone else in the chat wants Sean's help, feel free to DM him. All right, next. And then you see in the 4 hour, we actually did wind up tapping. We reversed at the bottom gap and came up into this red gap perfectly. So that could have been your target, the bottom of that gap. Instead of the highs, that gap right there. Which it would be red technically, not green, but that's it, you know what I'm saying? That's all you need. Just some gaps. And then just look at what chart is better, because sometimes usually the 4 hour chart is better because it's the hard time frame. But some days the 4 hour chart is indecisive because it's ranging, and then you need to look on the 15 minute or the 1 hour to to not miss out on the trade if you want to trade that day, or you can just not trade that day. I'm getting better at not trading now that I have real money to lose. I'm getting better at you know what? I don't even want that price action. And that's also you get rid of your fake outs. I got rid of 90% of my fake outs by sitting on higher time frames like this. I only go on the 3 minute if I have to. Like on that last trade, we didn't have a gap on the 15 minute or anything to enter off of, but I took a trade today off the 1 hour chart and the 4 hour chart. Next Monday, the news will be at 9:45. Do you recommend take a trade before or after news? Always, I prefer after, or be out before news. So if you take a trade at 9:30, you need to be out by 9:45. I don't trade till after 10 a.m. anyway, because I usually get out of news. But I don't gamble news, except for FOMC. FOMC is the one news I feel like that acts real nice every time. Okay, for the 4 hour, it's looking like we might come out of this gap right here, or go lower into it. On the 15 minute, there's so many gaps we could go lower into, we could go down into this one and then bounce, which also lines up with the 1 hour. So also a thing you'll learn, there are days when the 4 hour fair value gap will line up with the 1 hour, and then there's days when the 1 hour gap will line up with the 15 minute. As you see, these are basically the same on the 1 hour, but on the 4 hour, they're not. So you have to look at all three, and I just do hate doing this because my computer is small and I'm blind. So that's why I was avoiding this, but looking at this today has already helped me feel so much better about trading. And I feel like I can really know, like I said, Thursday really shocked me that we bounced on that 1 hour gap. What the fuck? But we did. And it was just, I should just react off of it. And I called the trade. We inversed the 3 minute fair value gap, and it just ran without me. Okay, what are we doing? We're playing. All right, we inverse the gap on the 15 minute. So we could go down to these previous day lows off this gap, but I think we should wait and let it play out, and or maybe go down to the 3 minute just to see if we get a better something. The low is here. That London low. I mean, I don't really like that London low, so it really can probably sweep that. I mean, if you want this little move, you might get it, and that's why. See, I mean, you just know. You'll know when something might want to go up. I personally would want market trigger shift on the 3 minute is out of the gap anyway, which would be an extra confirmation, and then maybe we take it to. There's a high here, and obviously there's a high here. So let's see. And if you don't feel comfortable, just don't take it. Boom. That'd be my entry. Right? Candle close out of this bullish gap. And am I wrong? I am right. Both targets are not gonna get hit. Nope. See, this is why for those who trade with me live, y'all know I'm the queen of taking it to the first TP because it almost hit second TP, and sometimes I do get mad at it though when it goes to all three of my TPs. But at the same time, I trade one micro, so it reversing on me, eating my profits is worse. Like waiting for this, then it coming down, and I was up 200, now I'm up 50. Like that's money, that's a bill, that's grocery money. So to me, nice trade. See what I'm saying? Why is price on Luke? You do this every night. We're back testing. This is literally 2022. This is replay. This is not a real live chart. You know this. You do this every night in my live. You ask why my chart is this. You ask something. You know we're back testing. This is literally FX replay. It says it on the screen. That's why my chart is at 13 and the real chart is at 19. This is 2022. We're just practicing. We're just practicing. I don't know what your deal is. But yeah, great trade. So most of the time too, I learned and experienced if it's a big gap, and this is how most people trade. But you know I do this every night. It's like my 60th day doing this. And you come on every night. I've seen you in my live every night. Thank you for the support, but you've been in this live every night. It's nothing new. You can just get in the gap and take a trade from liquidity to liquidity. You don't need it to think, yes, on the 4-hour time frame, you want it to run all the way up to this gap or all the way up to this high, but you just might not get that today. So you go on your lower time frame and you take your trade. Yes, if you were confident in your bias of buys, you probably would have gotten your market structure shift down here. But for me, that 15-minute inverse made me think we might could go lower. This closing so far below, even though on higher time frames, it always almost fills the gap all the way. Like it likes to fully fill. That's why today when we reversed off this 4-hour gap and didn't fill it, I was actually kind of shook about it. I thought we were going to fill, but we filled the one before it. We completely filled this one, and then we tapped into the next one. But yeah, then if you wanted that down here, you could have got a better entry, but I waited for a safer entry, which I don't mind doing sometimes, and then taking it to the most liquidity, the next liquidity, and that's it. That's all you gotta do. You don't need to have like these home runs all the time. I know sometimes I like to have home runs all the time, but you don't have to have them. So let's do another one. But yeah, this is how, I'm not gonna trade live for a minute, probably not trying to Discord, but this is literally how I'm trading now. Looking at the higher time frames, all three, because like I said, there's a day where it'll come into a 15-minute gap. There's a day where it wants to bounce off a 1-hour gap, a 4-hour gap. You just never know, and you want to be prepared for all of them. Let's delete. Like today, I only looked at the 1 hour, but today the 4-hour was stronger. And yesterday, I was only looking at the 4-hour, but the hourly was stronger for like my entry. So you just have to look at all three, sadly. Next New York session. I usually mark my levels on the 4-hour only. 4-hour and 1 hour for the most part. Or you can just tell. Like some days it's the 4-hour, some days it's the 15-minute. I don't know what we were already close to this low here. Maybe it's one of those days where it wants to just come back up into one of these 15-minute gaps and then just go lower. Lines up with the 1-hour gap. I don't know. And honestly, all you really need to do is mark out things on your chart and then wait for it to react off of them. That's really all you need to do. There's no liquidity here for value gaps. There is a 1-hour for value gap down here. It's tiny. That maybe we inverse or bounce out of because it's a bullish one. It might bounce up, like I said, go up here and then continue lower. Who knows? But just wait for a reaction at your time frame. We trade at 10. We right at dawn. So, boom. It happened before 10 o'clock, so it doesn't even matter. Still happened before 10 o'clock. So, this is a nice... I don't know. This is a day where we might just keep running down. I don't know if we're going to reverse off any of these points. I mean, there is a gigantic 4-hour gap here that's looking like where the market wants to go to. So 10 o'clock, you can get in that trade if you want it. Let's see how far it goes into this gap. I think it's going to go in at least halfway. I usually can take it at least halfway. Let's see. And if not, I could just reverse at 10 a.m. I mean, all right, bounce out of the gap, but that's still not a bad move. I was scared this candle, this 9 a.m. candle, was gonna run further down. It did not, so that's not the worst of trades. It's almost a 1 to 2. It's not the worst. It's not the best, but again, it's not the worst. This is when that was like the first trade I took today. It was like 10 o'clock to the top of this right gap, like half this candle. And then I got in the inverse for a bigger trade. But you know, sometimes if you want to take it and you're kind of confident we're going there, take it. And then let's see if we get a reverse or we go further into the gap like I originally thought we would. That's the end of the day anyway. Yeah, end of the day, so it didn't matter. Didn't matter. End of the day, that was the only trade you got. So if you took it, you took it. If you didn't trade today, that's not even a bad day to not trade. This is the 15-minute chart too. It's not the hour or the 4-hour. So it's like, it's not really moving that much. It's 15-minute chart, so this could be a good bit of movement on the 3-minute. Let's see, but it's still not that great. It's decent, but y'all know me. I like bigger moves than this. But that's it. You know what I'm saying? Like if you look at all three and they all three line up, you know what I'm saying? You can take that. If you wanted a shittier entry and you just wanted to trade that day, but you missed the first one, you got a little gap here to enter off of for a 1 to 1.5. If you really need to trade that day and make a quick, you know, $50, $100, depending on what your risk is. This could be $10,000 for somebody. Yeah, that's it. Like, I really feel like I'm confident. I got my emotions out. Seeing the 4-hour chart not betray me today really reassured me that, you know, some days I just might not take a trade. I might miss it, and that's okay. It's better than a loss. It's better than a loss. I think that's it for today. We'll do the same thing tomorrow. This is how I'm going to backtest the rest of the year. Like I said, I'm backtesting the rest of the year. Enjoy this now, because in this January, this will not be happening anymore. But yeah, just looking at higher time frames and seeing which one aligns better, seeing what things react off more, and seeing just where the 9 to 10 candle closes. And that will let you know if the 10 you just buy right at 10, like you could have bought right at 10 o'clock if you were extra confident. And then you could have just waited for, you know, something else. And that is totally fine. So I'll see y'all tomorrow at 8 p.m. And then I go live now after I trade every day on the weekday. I'll either enter a trade and the trade will be playing out, or I'll be done trading and I'll just go live. And that's it. But yeah, backtesting every night, 8 p.m. Y'all know the drill. And yeah, see y'all tomorrow.